My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people, my friends, I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me, 1-800-743-CNBC. Tweet me, Jim Cramer. Sometimes you have to know when the narrative has shifted, when we have a whole new set of priorities. Right now, we'd like to think that NVIDIA's earnings report is all that matters. And that's true for tech, certainly. And after the bell, NVIDIA delivered just a terrific set of numbers. But we must admit to a new pattern that can even transcend the likes of NVIDIA, as we saw today, when the market soared in the morning, full head of steam for virtually every stock, until the market crashed into a brick retaining wall, averages reversing hard, Dow finishing down 188 points, S&P rising 0.01%, NASDAQ advancing 0.26%. It was up so much more than that. The brick wall, the president of the United States. Yep, we were flying high midway through the high bank oval when President Trump started talking in a televised cabinet meeting, and it didn't take long for him to talk about his obsession, tariffs. The president knows that many countries run trade surpluses with us, and he's determined to change that. So we are beginning to understand that when there's a camera, there's a tariff discussion, and it's beginning to wear investors down. You doubt me? All right, look at this, look at this. The market's coming around the first turn, all right? Here we go. It's flying, and then boom, okay? Boom, 12 o'clock. Meeting starts. Just goes down and down and down and down until about 2 p.m. Why? Because then kind of the coast is clear and the president might not talk again, but it doesn't save the day, does it? So a beautiful day, and then right here, we get right into where we're about to have that discussion. Boom, we have a discussion, and bang. Now, we get a great set of numbers from NVIDIA tonight, and then we'll have to wonder what they matter tomorrow. Will they matter? If the president ruminates on Taiwan tariffs or China tariffs, 25, 50, who knows if it'll matter? Now, speaking as a citizen, I have no problem with these tariffs, if only to protect against unfair trade practices. But as someone who cares about the stock market, I can tell you that we're entering a new, more mercurial world where we have to start worrying about the president's public appearances because we don't know which country, which continent, which ally he is going to attack next. Maybe in this sense, the Russians are lucky. In 2021, they ran a $23.3 billion trade surplus with us. Now, that's way down thanks to the sanctions we hit them with after they invaded Ukraine. No matter. This market's decided that as much as it matters if there's good news, like NVIDIA, what matters more is that we have very little certainty on trade policy, aside from the fact that the president loves tariffs as much as he loves making headlines. Now, I don't want to obscure the company with a stock that I always say own, don't trade, NVIDIA. After the close, it was a very good quarter. Everyone thought this would be the most eventful quarter of earnings season, but it was a non-event. Why? Because it was terrific, and Jensen Huang gives us terrific numbers. He's about as steady as the president is mercurial. The company put up solidly better than expected sales and earnings with strong guidance for the quarter, driven by the strength of their new high-end chips, Blackwell chips, fantastic, bravo. While we still have to worry about tariffs and export restrictions, I have to tell you the numbers were excellent. But let's talk about another situation. Let's talk about Apple, okay? Apple's America's greatest company. The other day, CEO Tim Cook committed to spending $500 billion in the United States over the next 4 years. Cynics are telling me that that's not a real narrative, but that's wrong. They say it was planned ahead of time. That's wrong. I say, who cares? The commitment is terrific. Hey, a lot of that could have gone to India. But Apple, did they get any sort of immunity? Of course not. They could be hurt by tariffs tomorrow. Seems wrong to me. Maybe that's why Apple stock got hammered today. It ended up down $6.68 or 2.7%. When I searched for any reason, all I could come up with was one explanation: tariffs. Sure, Apple's an American company. It's going to make a lot of things here, but it gets a substantial number of its parts from Taiwan. It manufactures a huge amount of its products from cell phones in China. Because of the president's somewhat arbitrary nature, it's very hard to own Apple here now, because you do not know if the president is going to attach tariffs to Taiwan, slap more tariffs on the People's Republic of China. Is there any assurances he won't? What will that do to Apple's gross margins? Can it afford margin deterioration when the stock trades at 33 times earnings? That's why the stock went down. These are the musings of someone who actually likes the stock very much, who says own it, don't trade it, and thinks the company's sensational. I just cringe now when the president talks about this stuff. Again, not because I'm against tariffs. I'm in favor of tariffs. I like targeted tariffs. For example, it's outrageous that China exports steel to Mexico in order to evade our tariffs and then ships the steel here. Got to try to close that back door. Well, what do we do with the cars when we make in the United States? They go back and forth over Mexico border when we make them? We don't know. And that's a big reason why General Motors trades at less than 5 times earnings, just extraordinary cheap. It's a big reason why CEO Mary Barra announced a $6 billion buyback today. The stock, which is down 9% for the year, had a quick bounce, but it gave up a big chunk of it. Tariffs. We never know when we're going to hear about tariffs next, but we do know they're coming, and we know that no stock is immune. Tariff talk is so pervasive, so overwhelming, so in your face that we even stopped discussing what dominated our discourse for years, which was the bond market. Long-term interest rates have plummeted. The 10-year Treasury, which not that long ago seemed to be headed toward 5%, is now slouching toward 4%, finishing at 4.25% today. That's insane, especially when you remember that we have keep having gigantic bond auctions. What happened to all those 5%ers anyway? Probably go to Palm Beach, avoid taxes. A couple months ago, if we got this kind of action in the bond market, stocks would have exploded higher. We'd probably be making new all-time high after all-time high after all-time high. NVIDIA would be up 25 points today. The bulls would be running free, trampling any bear in sight. But now nobody cares because rates are coming down for the wrong reason. That's right. It's because of tariffs, because of worries that Trump's trade policy will do real damage to our economy. A huge amount of money is flowing to the 10-year because the 10-year may be the one piece of paper in this entire country that doesn't go down when the president speaks. In fact, the president has become the bond market's best friend. I don't want to be a heretic in a market that's gaga for NVIDIA, but I think bonds represent safety in a world where the president, not inflation, has become the chief impediment to higher stock prices. Too many companies can be tariffed, and they very well might be. There's just way too much fear. Look, I've never bought into the dogma of free trade. I am not a globalist. But let's face it, Spain's a better market at 15%. France up 10%. Germany, so troubled, 14.5%. China, roughly flat this year, but it's made a big recovery, up 8% from its January lows. While I expect all these markets will eventually experience the wrath of President Trump, they don't suffer from an almost daily barrage of tariff talk. Or let me put it another way. At another time, this market could have handled poor results from NVIDIA and still going higher, pretty much just because of the Treasury yields, because that's a sign that we got inflation under control. But the bottom line here, it's not happening. The market's not happening. It's not going higher because we know the president could come out any minute and rock this market with a new tariff from pretty much any country where we have a trade deficit, and that is most of them. It's time to give the tariff talk a break, if only to celebrate NVIDIA's stupendous quarter, Apple's tremendous commitment to this country, and all the great things that United States companies do for all of us. There. Ian in Florida. Ian.
Hey, booyah, Jim. How you doing?
I'm doing okay. How about you, Ian?
Doing excellent. Thank you, Jim. Third-time caller and investment club member.
Excellent. Thank you. Thank you very much.
Jim, I wanted to ask you, I wanted to get into cybersecurity.
Sure.
And one that I've been looking to enter for a while is Palo Alto Networks. What do you think about this levels right now?
Really interesting question. Nikesh put up a really good quarter. The headlines were out immediately. Before they even could read the release, sellers came in. Had they read the release, they would have realized it is fine. I like Palo Alto very much. It's a great way to get involved in cybersecurity. Ian, good work, and thank you for being a member of the club. Robert in New York. Robert.
Jim, how you doing tonight? Everything's great. I got to tell you. I want to say one thing before I get started, Jim, that you have basically saved all of us money. Do you know why? Because you use a word that's so important for the Wall Street listeners and the people, the common man, diversification. And during this downturn, it's so crucial. But I just want everybody to remember that word, diversification. And
because if you had all, if you had all, let's say, the foods and drugs, you thought you were doing great. You just got obliterated this year. We could have a big, if the president slaps tariffs on Taiwan and China that are really big, you're going to get obliterated in tech. So I agree with you, and I thank you very much for that. How can I help you now?
I thank you. Okay, this next company is taking a page out of Amazon's playbook. It's easy to set up and integrate this company, and it provides services for both digital and physical platforms. It was built with digital in mind, and it's trying to position itself as the go-to destination for omni-channel retailers. And this is where retail is headed. At one time, this was a very big high flyer, and I think that it still can go higher, Jim, and I need your guidance.
Okay.
Shopify.
They are, I tell you, everything you said about it is totally true. It is absolutely the right thing. They are very easy to set up. They are the ones that every single entrepreneur that I know is on Shopify, and I think you nailed it. I know that the last quarter people misinterpret it and they sent it down. Why don't you wait until they report it again? That same thing will happen, and you'll be able to have a better opportunity to buy it than you have right now. And thank you for those kind words. And yes, diversification is king. Right now, there's just too much uncertainty around the president and tariff plans. You've got to give us a break, Mr. President. Just give us a break. On Mad Money tonight, Salesforce is on the move after earnings. I've got the CEO to break down the numbers and the company's expanding partnerships. Then Axon flew higher today on last night's report, despite its big pullback. Don't miss my exclusive to see if the stock has even more room to run. And later, hey, Oddity Tech. Could that be a standout in the cosmetic space, which we know is so weak? I'm going to talk to the CFO following a fourth quarter top and bottom line beat. So sorry I'm overheated about this, but I know what could happen in this market. I know how great it could be. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.